Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and the banking system overall, I instructed my team to act quickly to protect these interests. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into this circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law. And finally, we must reduce the risks of this happening again. During the Obama-Biden administration, we put in place tough requirements on banks like Silicon Valley Bank and Signature Bank, including the Dodd-Frank law to make sure that the crisis we saw in 2008 would not happen again. Unfortunately, the last administration rolled back some of these requirements. I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses. Look, the bottom line is this. Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you we will not stop at this. We'll do whatever is needed.
What's up, YouTube? It's James coming back at you with another informative video. I hope you guys are doing well out there on this Monday. I'm doing pretty good myself, and I hope you guys had a very, very nice, relaxing weekend. Mine went well, and as usual, it just went too fast. You know how that is, okay? Now, you heard your boy right here, President Biden, say that people can rest assured that banking is going to be safe to bank and all that kind of stuff. Well, you know what? If you believe that, then I have a bridge that I want to sell you. You understand what I'm saying? Because I do not believe in this cash system, and it is said that it will collapse, okay, eventually. And we keep getting these signs. That's exactly what is about ready to happen, you know. If you guys see like a pulsation in the camera, please excuse it. I don't know why it's doing that. But yeah, the thing is this, I do not trust not one thing that your boy just said, because back in 2008, well, we seen a big sign of, banking actually collapsing, and then you had what I'm saying, the Fannie Mae and Freddie Mac situation, where people actually, had like, I don't know, if say for example, if you had like $1 million in the bank, it was only insured for $250,000. You'll get that back, but the rest is just gone. Okay, that's what it is. But let's see why they're saying their excuse as to why this Silicon Valley Bank actually collapsed. Okay, why it fell. It says here, Silicon Valley Bank Signature Bank failures explained. Live updates on new developments. Okay, it says here, it's been a tumultuous few days for banks since the now shuttered Silicon Valley Bank announced Wednesday it had suffered a $1.8 billion after-tax loss and urgently needed to raise more capital to quell depositors' concerns. Okay. By Friday, SVB's chances of getting access to more funding appeared paper thin. That led the Federal Deposit Insurance Corporation to take over the bank after failed attempts to sell it to healthier banks. Okay. See, this is what I'm saying about a lot of these people hiding behind the scenes robbing. That's the reason why it really happened, but they're not going to tell you that, But your boy Biden said these people are going to be fired, if FDIC has to take over. So FDIC has taken over. Okay. Now continue here. It says FDIC announced Friday afternoon that customers who had up to $250,000 per account deposited with SVB, which was the nation's 16th largest bank, would have access to their funds by Monday morning. But it wasn't known at the time what happened to deposits that exceeded $250,000, the limit the FDIC ensures in the event of a bank failure. You see what I'm talking about? See, if you got more than that, well, then you're just gonna get ripped off. You understand? But your boy Biden, he said that everything gonna be all right. We have yet to see this actually take place. All right. As far as I'm concerned, I think people will be better in taking measures to, saving their own money and hiding it the best way that they can, instead of trusting other people with your money. Okay. Now to continue here, it says over the weekend, the Federal Reserve, Treasury Department, and FDIC announced that SVB and Signature Bank's failure posed a big enough risk to the entire banking system that it merited allowing regulators to take the unusual step of guaranteeing the larger deposits. But the saga doesn't end here. Here's what we know so far. Y'all excuse these pop-ups. Saying get on my nerves sometimes. Very annoying. They say it doesn't end, it don't end here. The saga will continue, Here's what we know so far. It says here, why did SVB fail? Silicon Valley's customers, who were largely startups and other tech-centric companies, started becoming needier for cash over the past year. That led them to withdraw money from their accounts. SVB, meanwhile, needed to keep selling its assets, mainly bonds, at a loss to free up capital so that customers could withdraw funds. But the bank got to a point where the losses were so high, customers began to fear SVB couldn't guarantee access to every customer's funds. That fueled a massive bank run, which caused the FDIC to step in. Okay. Yeah. So that's what it is, people. You know what I'm saying? Like I said, y'all may, take different measures, to save your money and hide your money, Matter of fact, I'm going to go as far as to say, convert your money to either gold or silver. Okay. Because, this whole financial system is going to collapse. It's going to collapse. It's not a matter of if, but it's just a matter of when. And when it does, you want to be prepared. But I want you guys to tell me what you think about this particular story right here. I'm interested in hearing your thoughts, views, and opinions on it. Like, comment, share, and subscribe. And if you like the content, feel free to donate. Definitely appreciate that. And people, please remember to live your life as though we're being watched. Simply because we are. This is James, and I'm out. Peace.